Hello, everyone. My name is Priyanka Mehta. I'm part of the Hamilton Lease Accounting team at Cognitus Consulting. Welcome to this webinar. Today, we will be discussing the basic events that can be performed in Hamilton Engine. Today's speakers are Mr. Mehta and Budi Rahman. During the session, please feel free to communicate with the speakers through question and answer. At the end of the session, we will take time to answer any questions you might have. There is an icon at the bottom right of your screen which says raise hand. You can click that icon and the speakers will see that you have a question and respond to you quickly. Now I will pass it on over to Mr. Mehta.
Good morning and good evening to everyone. This is Nageshwara Mehta. I'm a senior FICO consultant working in SAP from the last 19 years as a FICO consultant. And today we're going to talk about I'm going to give you the overview of Hamilton Engine, and we'll do the basic functionalities of Hamilton Engine. And before I start, I'm going to pass it on to my colleague, Budi Rahman, who is the designer and architect of this solution. Budi.
Yeah, thank you, Mehta. Hello, everyone. Good morning, good evening. I'm Budi Rahman. I'm Hamilton Solution Owner for Lease Accounting under IFRS 16. I've been implementing SAP since 20 years ago for small and large organizations. Hello?
We can hear.
Can you hear me? Mehta? Hello, Mehta?
Budi, we can hear you.
Okay. Am I audible?
Yeah.
Okay. So let me repeat my introduction. I'm Budi Rahman. I'm Hamilton Solution Owner for Lease Accounting under IFRS 16. I've been implementing SAP for quite some time for small, medium, and large organizations. Today, we'll be discussing basic events, okay, under IFRS 16. Back to you, Mehta.
Thank you, Budi. And can you see my screen?
Coming, I guess. Yes, it's coming. Not yet.
Yeah.
Oh, is there?
Okay. Hamilton Engine is a perfect solution for IFRS 16 and AC 842 compliance, and also IFRS 15 and IFRS 17. This is a better solution for this compliances. And I am going to recap whatever we did in the last session. We are going to extract the data from third-party softwares by using ETL tools and load the data into Hamilton Engine as a raw data by using use case ID. Hamilton Engine is driven by the use case ID. Use case ID is a set of logical rules which is built in the brain. So here in the first brain will process the raw data and enrich it, and the second brain will process the data and create the business documents in Hamilton Engine. These business documents will be posted into SAP environment. So today we're going to talk about the basic events in Hamilton Engine. So we're going to talk about the term extension, term decrease, payment increase, payment decrease, incentive, initial direct cost. So first we're going to talk about the term extension. And this lease is $1,000 per month and payable in advance. Lease commenced on January 1st, 2019 until December 31st, 2021. Incremental borrowing rate is 8% per annum at the commencement date. So after 3 years, or in the middle of the contract, lessee chooses to extend the lease until 2023, the same unit price. So I'm going to do the demo in the system so that you'll have a clear understanding how the system works in Hamilton Engine. Okay, can you see my screen? Can you see this spreadsheet? So this is the spreadsheet we are going to use to upload any contracts. So the first column is use case ID, this is the use case we used to load the initial contract. This use case is called Genesis use case. The column B is the contract category, which is specifically defined by the business, how they want to see their reporting structures. The first 2 digits represent company. The next 3 digits represent any product line, or next 2 digits represent region. Next 1 digit represent country, and the last 2 digits represent sequential. So business needs to finalize how they want to see the reports. Reporting structure can be configurable. The column C is a lease agreement ID or header ID. This must be unique for each and every contract. And lease ID is going to be how you want to classify your contracts in the system. So laptops, buildings, land, that kind of things, heavy machinery, vehicles, that kind of things. And this is a vendor code, and this is a reference ID. This is the start date and end date of the contract. And the payment is in advance. And payment cycle is monthly. Billing cycle is 1, that means once in a month. And company code, this is a legal entity, which is SAP legal entity here. The asset serial number, currency of the contract, and cost center. And status 1 is active. And then this is the payment information, and this is the AH and AI is the useful life of the asset or the contract. Based on that, system will determine whether it's a financial contract or operating contract. Here, this is also payment cycle start end dates, and the invoice amount is your monthly payment here. Then I'm going to change the agreement ID. So here, we're going to use this transaction code to upload the raw data by using the Excel. The file, I'm going to take the file name, lease inception, and click on execute. So here, the system will process the raw data, and the first brain and second brain will work behind the screen. and create the accounting basic documents there. So I'm going to, so here, this is the lease contract dashboard. Here you can see the schedules generated by the system. So this is the contract I created here, which is in the active status. And let me show you this lease schedule. So here you see the total cost of the contract, and this is your accumulated depreciation for this month. This is the total cost of the asset and total accumulated depreciation. Net book value is going to be zeroed out by the end of the life. Here, system is generating the schedules by period here, and the total cost of the contract is this, and the same amount will be recorded in the liability side. So first three, this color, blue color is balance sheet items, and green color is a depreciation expense, interest expense, and rental expense, which is on the P&L side. So here, this is the header information. You see all header ID, use case ID, start date, end date, and lease status, vendor number, and vendor name, and the reference number. All these fields are on the header information, or the header data. So once the contract is created, I'm going to make changes to the same contract by using different use case ID. So I'm going to do the term extension. Term extension here. So this is a different use case ID here. So initially we used SP01, which is a Genesis use case ID, which is used to create the contract. This is SP02 is a different use case ID with different set of logical rules built in, and this use case ID is used to make changes or modifications to the existing contract. Here, I'm going to use the same contract ID, which is used to create the initial inception of the contract. And once the contract is changed, then the system will generate the first use case when the contract is created by using SP01, and now I'm making changes to the existing contract by using SP02. Now another set of rules I'm using to make the changes to the existing contract. Here, I am changing the term. Initially, my contract was until 2021, and now I'm extending this contract until December 2023. When I'm making this change, I'm making this change on May 1st, 2019. And also, and my payment cycle here also, I'm changing the date here, 5/1/2019 till December 2023. This is the contract I'm going to extend from 2021 to 2023. And the invoice amount will be the same. I'm going to go back to the same transaction again. Here, term increase. I'm going to select this one and click on execute. Done. Here, before you make the changes, this contract is active. Now let's see see this, how it is going to be changed here. Now the contract is modified and active. The contract status has been changed from modified and active. So go to the lease schedule here. I'm making this change on May 1st, 2019, saying that this contract is going to be extended until 2023. So whatever the value from 12/31/2021 till 12/31/2023, that is calculated here and adding to the existing contract. That means your contract value has been increased by this number and your liability also increased by the same number. And if you look at the contract here, it has been extended until 2023 December. This is about the first scenario, term extension. And here in this slide, this is before change and then after the change, after change. And here the contract is ending here, 2021. Here it is extended until 2023 December. So this is about the term extension of the existing contract. The next scenario is going to be term decrease. Term decrease. And the same thing is $1,000 per annum and payable in advance. And the same thing, contract start date, end date, IBR rate is 8%, unit price is 1,000, and term, I'm reducing the term until 2021, that's 2020. So in the same way, I'm going to do the initial inception, that means initial contract creation, by using different use case, different contract agreement number or agreement ID. I'm saving this. And load the contract again. This is, I'm going to create the initial contract creation by using the Genesis use case ID. Sorry. So the contract has been created here. I'm going back to the dashboard. So this is a second contract created. The same thing with the same contract I created again. So now I'm going back to make changes, that I'm going to decrease the term here. So this is a decreasing the term here. I'm going to use the same lease agreement ID in the previous screen. And here I'm reducing the term from 2021 December till 12/31/2020. And this is when I'm applying these changes on 5/1/2019. When you are making changes to the existing contract, you need to make sure this agreement number ID is the same of the contract which is already created. That is the key here. And also use case ID SP02, which is used for changes or modifications. And also here 5/1, I'm making these changes 5/1/2019 to 2020 December. And I'm reducing I'm using the same amount. I'm reducing the term, not making changes to the existing amount. Same transaction I'm using. I'm decreasing the term here. This is done. Going back to the dashboard. Here it is active now. Now the status will be changed to the modified. So now the 501 contract ID, this contract has been changed. Now I'm going to show you the lease schedule here. Again, here there is a reduction in the contract value because you are reducing the term from 2021 December to 2020 December. That's the reason there is a reduction in the contract value. If you go here, initially it was December 2021. Now it has been reduced to 2020 December. So this is how you're going to reduce the term of the existing contract. If you go here, this one. Here, the initial contract is until 2021 December. Now, after you make changes, this is the contract term has been reduced to December 2020. And also, these changes are applied on 5th period of 2019. Here you can see that. Here, this is the period where the changes are applied to reduce the term of the contract. The next scenario we are going to is payment increase. Payment increase, the same thing, $1,000 per month and payable in advance. Lease commencement date is 1/1/2019 and the ending is December 2021. Incremental borrowing rate is 8% annum at the commencement date. And after 4 months, again, I'm going to apply the changes on 5th month. 5th month, and to make the changes, and I'm going to increase the payment for $1,500 from $1,000 to $1,500. Again, I'm going to create a new contract. New contract. I'm changing the lease agreement ID using the same information. Contract is created in Hamilton. To go back. So contract ID SAP 502 is created with the contract number 10696. This is the same information we have when you created the initial contract. And this is your cost of the contract, and this is your liability, and this is all the balance sheet and P&L account postings here. And then if you go, this is a term is 2021-2012, the ending in 2021-2012, and this is the monthly payment is throughout the life is 1,000. Now I'm going to make changes to the existing contract from 5/1 2019, I'm going to increase the payment by $1,500. And also this will increase the cost of the contract and liability also. Payment increase. I'm going to use the same agreement or contract ID. It is the same case, same use case, SP02, which is used for modifications. And I'm going to apply this payment increase on May 1st, 2019. And here, I'm going to the same thing on the payment side also, and I'm going to increase the payment by $1,500. From that period, your monthly payment is going to be increased from $1,000 to $1,500. So I'm going to use the same transaction to make the changes to the existing contract. Payment increase. Just a second. Oh, I used the wrong contract ID. That's the reason system is telling me there is nothing to make changes. So this is 502. The contract ID, see this here, SAP 502 is the contract ID. So 502. Now I'm going to load it again. Now the changes will be applied to the existing contract. This is done. See, it is modified now. When you click on the lease schedule from 5/1/2019 till the end of the contract term, your monthly payment has been increased from $1,000 to $1,500, and whatever the additional added value is here, you can see that this will increase your contract value, and also the same amount will be increased at the liability side also. So throughout the contract life is $1,500 from May 1st, 2019. So this is about the payment increase scenario. The next scenario is going to be payment decrease. First, I'm going to create the initial contract. The same scenario here, everything, all information is the same. Monthly payment is $1,000. And in your slide here, before and after the payment increase here, you can see $1,500 is increased from 1/1/2019. And the next scenario is a payment decrease. Same thing, everything is the same, except you're decreasing the payment term. I'm sorry, amount. Monthly payment, you're going to decrease it. So I'm going to create initial inception, which is creating the contract by using the Genesis use case ID. Contract has been created. Here the contract is active, and the same thing, you'll see the initial cost of the value asset, and throughout the life, your monthly payment is $1,000 throughout the end of the contract, and this contract is ending December 2021. Now, I am going to make changes. I'm going to reduce the payment from the same period, which is 5/1 in the May 2019. So I'm going to do the payment decrease. The contract ID for this is 503. I have to use the same ID in order to make changes to the existing contract, which is 503. And this is SP02, which is used to make changes or modifications to the existing contract. So this is a start date. Start date means I am making these changes in May 2019. And so I'm reducing the monthly payment to 800. From 1,000 is the current monthly payment, and now I'm reducing the monthly payment to $800. Decrease payment. Changes have been applied to the existing contract. Again, this is active. After I do the refresh, that will be changed to the modified and active status. So it has been changed here. If you look at the lease schedule, so changes are applied on this month, and there is a reduction in the cost of the contract. So here, from here onwards, my monthly payment has been changed from $800 to $1,000 to $800 throughout the life of the contract. So that is about payment reduction scenario. So the next scenario is going to be here. This is the payment reduction. Here you can see different amount than monthly payment here. And now I'm going to talk about the cash incentive here. So if you do the incentive, basically, your contract value is going to be reduced by that amount. The contract value will be reduced when you do the incentive, which will not have any impact on liability. Your contract value will be reduced by that amount, and there is no impact on the contract liability side. So I'm going to have to use the same header ID SAP503 in order to make changes to the, I'm sorry. So I'm not going to make changes. I'm going to create another contract. Now, one more thing here. So there is no need to make any changes to the incentive scenario. When you are loading the contract, by using Genesis use case ID, you're going to enter the incentive amount in the Excel file. So that is a Genesis use case ID we are using. There is no need to modify the existing contract. So here, what I'm doing here, my incentive is $3,000 negative, so which will reduce the cost of the contract. I changed my agreement ID, header ID, and I entered the term is the same. All information is the same, except I added this incentive in the upload file. I'm going to use the same transaction to upload the initial contract. Incentive. It is created. Now I'm going back to the dashboard. The contract has been created here with active status. And here, when you go to the lease schedule, so here there is a reduction. So this is your liability, and this is reduced. Your cost of the contract has been reduced by $3,000, and this is recorded in the separate GL account. So this is about the incentive scenario. This is pretty simple. No need to make changes to the existing contract. When you're creating the contract, you are entering the incentive value in your upload file. So this is about the incentive scenario. Here, the same thing here. So incentives are here. This is incentive. And the next scenario is going to be initial direct cost. So when you do the incentive, your cost of the contract is going to be reduced. When you do the initial direct cost, your cost of the contract will increase with no changes on the liability side. So let's do that scenario. So IDC. So I'm going to use the next header ID number, which is 505. And I'm using the Genesis use case ID. All information is the same, except I'm going to enter the initial direct cost in this column. So this will increase the cost of the contract with no impact on the liability side. Contract created. So here, this is in the active status, and this is a contract I created. And when I go to the lease schedule, here, this is your cost of the contract has been increased with no impact on the liability side. So this is about initial direct cost scenario. in this example here, $3,000 is the initial direct cost, which is increase the cost of the asset on the contract. So if you have any questions, please contact Budi. As Priyanka said, please click on raise your hand. Budi, over to you.
Okay, thank you. Okay, it is good introductions of some basic events. Okay, so these are the basic events that supported in Hamilton. Yeah, and we do have more sophisticated business scenarios like sublease, sell and lease back, intercompany lease. Those are more sophisticated business events, which we will discuss in a different time. And today, let me know your questions. If you have one, please raise your hands, and I'll be glad to answer your questions.
Budi, you have some questions in the chat. Would you mind reading the questions out loud so everyone else?
Yeah. So there are a few questions here. Okay, let me just give me time to read the questions. Okay, let me read the questions. So there are questions raised by the participants, okay, by the audience. So the first one is how long is the implementation of this Hamilton engine? So on average, Hamilton engine can be implemented around 3 to 4 months, which is shorter than other solutions in the market today. Okay. And questions from Mr. Budi Liman. If you have like withholding tax applicable to lease contracts, how can you fulfill them? Okay, so Hamilton engines supports, we call it non-disruptive approach, which means we will not change the way the existing business or process work today, including how the tax calculations. Okay, so for withholding tax or any tax applicable for lease or lease contracts will not be calculated in Hamilton engine, because Hamilton engine focus only on numbers, exclude tax. So all the numbers that excluded tax will be recalculated and posted to new IFRS 16 GLs. Okay. The next question is, can it be calculated along with the cash flow of the contract? Yes, it does. So the system will generate the cash flow reports. We call it the liquidity risk model. So it will project in terms of a cash flow planning in a year, in 2 years, in 3 years. In Hamilton, these reports purely configurable. So we don't need a developer to develop the program, to develop the reports. These reports is 100% configurable in Hamilton, we call this report bucketing report. Okay? And we can create a different bucketing depending on the business requirement. So the next one, also there's a question from Mr. Nur Muhammad Yassin. Is it possible to change the contract term and the consideration of payment at the same time, or we need to do it separately? In Hamilton, we can do all the business events changes at the same time. Like we change the contract term, we change payment at the same time, and the system will apply those changes together when the modification, a lease modifications is applied to that lease contract. So, yes, there any other questions? So, just want to give you some information. So, after this basic events, this is still, we call it basic events. In reality, we are going to have more complicated business scenarios, right, which we are going to discuss it in the next sessions. So today, at least, it gives you kind of introductions how Hamilton supports basic lease calculations, right? So in the future, when we discuss about sophisticated business scenarios, then you will see the power of Hamilton, because sophisticated business requirements, it needs a complex calculation. So be prepared for the next event. We will share with you. And please, again, join to our webinar. If there is no other questions, I will return it to Priyanka. Oh, sorry, there's another one. I see the backdated flag. How far can it go backdated calculation for? Okay, so it's a good question. The backdated can be backdated as far as possible. Okay, it can be, if, let's say, if the contract was agreed during, let's say, a Dutch colonial time in the 17th centuries, if that contract still exists, yes, the system able to do backdated all the way to that period. Of course, it is just theory, but in reality, majority the contracts, the lease contract is around maximum maybe less than 50 years. So we can support the backdated all the way back very, very long. And especially when we do a transitions from existing lease contracts to the new standard, from old standard to the new standard, all the contracts will be calculated backdated. In under IFRS 16, this method called retrospective. So retrospective calculations, which means a backdated calculations. Yeah, so is there any other questions here? Priyanka, I think it's time for you to take the session back.
Okay, thank you, Budi. Everyone, as Budi mentioned, we will be having future sessions with more complicated scenarios where you will see the ultimate power of Hamilton Engine, and you will receive an email. You will receive all kinds of contact information where you can contact me at pmeda@cognitusconsulting.com. This email address is on your invitation that has been sent out to you. You will be notified when our next session will be. We will have many more sessions coming forward. And I just want to thank you everyone for joining us today. You will be receiving a recording for this webinar that we had today. If you have any questions, comments, or suggestions, please feel free to email me. And also, I would like to inform you that Cognitus has launched Hamilton Engine on the SAP App Center. Take a look and tell everyone you know, spread the word, and please email me if you have any questions. This will be the end of our session today, and email me without any hesitation if you have any questions. Thank you, everyone. Have a good day. Bye-bye.
Thank you.